All right. Thank you everyone for being here. This is the look at the week ahead of 2 December 2018. Look at the week to 3 to 7 December. All right, let's move ahead. I'm Steve Reiser, and I moderate a day trading room for hit and run candlesticks. We focus on trading stocks, options, and occasionally futures on a very short term basis. Intraday mostly, earnings releases after they occur, and potentially holding for 1 to 2 days on swing trades. Want you to know that trading involves a risk of loss of capital, and that you need to examine your own circumstances to determine whether that's good for you. All right, most people probably know a little bit about me. I've already posted this out to the room, so you can find out a little bit about myself. And there is the room that I moderate. David B. We found that most people wanted a shift to stocks instead of options, and we could do basically the same thing by monitoring the spiders, and we will monitor the futures as well, but trying to answer the requests and the needs of our clientele, the customers. So focusing on that. We're going to go over the economic calendar, earnings calendar, market overview, go over some trade ideas, some questions and answers that you might have that are not stock specific, and a look at your stocks. We have time permitting. I need to be done here by about 9 o'clock. All right, so I'll keep this one moving pretty sharply. Economic reports. I have the economic reports that are of note highlighted in red circles and ovals. But what I also want to point out is the markets are going to be closed on Wednesday, December the 5th, in honor of the late President Herbert Walker Bush on that day. So even though we'll get the report should come out the same day, we will not get the stock markets open. So we get 2 days of trading off, and then 2 days of trading, and then off again for the weekend. Earnings calendar, very, very light. We do have a number of retailers that are reporting. I have highlighted in yellow the stocks that have greater than 10% of the float that is short. Those are good candidates for day trades. And let's go over the market overview, and I'm going to bring up my Thinkorswim charts. I'm going to start with crude oil. It's gapping up right now, almost $2. So it looks like it's trying to rebound a little bit. This is not going to change my idea of the trend unless we get higher highs and higher lows. So we definitely at least have to get over about 55. And maybe even 57 and a half or more, and then pull back, establish a higher low, and then curl back up. So what it would look like would be something like this: pull back, hold a low, and curl back up. Right now we're just doing a reversion to the mean. It can go as high as the 17 exponential moving average, the little magenta line here, and still be in a solid downtrend. Gold's basically up $2. It's nothing to write home about. It's still in this trading range. Look at a 6-month chart. We tried to break out when we went back here in October. And 1230, 1250, I thought we were going to establish a move upwards, but we actually dropped down into the lower trading range. then we pulled back into the existing trading range, which is basically kind of this level right here, from about 1210 to about 1240. We're going to have to break out at 1240 or down below 1210 again to be out of that trading range. We'll go back to our 3-month, and let's go on over to the equity markets with the news that China and United States have agreed to at least stop raising tariffs any more than the 10% that they've already done. The markets are reacting accordingly. I think we're probably looking at the possibility of, let's see here, let's go to studies real quick, edit studies, 100, get rid of that. All right, so we're basically in the, on Friday we got above 2,750 and closed there, and Stochastics RSI was telling me that we were probably topping out and due for a pause or a pullback, but it was overcome by the news, and now the next level would be 2,820 as a possible swing level that we could get to. So we'll see whether we can actually continue a follow through on Monday and Tuesday. The Dow, same thing in between, same Stochastics RSI, same kind of pattern. NASDAQ also in this pattern where we're halfway between the two support and resistance levels. So this 69.25 will act as support and the 72.25 as resistance for now. Russell, it's also in between a support level of 1530 and a resistance level of 1585. We don't know where VIX is going to be until it opens. Okay. Let's pull this over there. Pull this down to the side so I can find it. That's the market overview. Little trade ideas. I'm going to go over those, but I've also put them in FinViz where you can watch. I've got longs and shorts. Let's bring up TC2000. Some stocks to watch in alphabetical order. I've got I got 13 of them here on the long side. I have, let's get to a daily chart. I have AMAT over 37.15 to go back up. It does have overhead resistance in this $39 to $40 level. So it doesn't have unlimited upside. Abercrombie and Fitch gapped up on earnings last week, pulled back a bit. It is holding the breakout level of 2080 over $21.96 to $22. We could get a run up here to 24. An aggressive trader could go long on a positive trading over about 21.25. Other one I'm looking at is BLDR. This level up here around 1450 looks like it wants to get retested. The reason is it was up on high volume. That was earnings related. It did pull way back, deep retracement. Not normally one that you get in back early, but right now it does look like it wants to get up there. It is a rounded bottom breakout now because it's over the 50. It has more than 10% between it and the 200. For me, the first target would be the declining 100 period moving average, and that would be around the 1450 level. From 13.50, 14.50 is $1. You say it's not a lot in dollar terms. In percentage terms, it's pretty much. Pretty good. The other one is BXSS with a long over 30.85 and a target around 32.5, and it has approximately about 5.5% there, so it's not technically a rounded bottom breakout. I'll come to your questions in a minute. I want to try to get through these first. FAF did a nice move up, is consolidating now, going sideways, but a move over 49 or so. Probably wants to retest at least the 50.80 level and probably 51.5. Another one on my list is Owens Corning, OC, over about 52.10 to 52.25. I think it goes into the mid 50s. Party City, a name after my own heart, over about $11.90, $12. It will probably grind higher up to approximately $13.50 area. And Red Rock Resorts, try to say that fast 3 times in a row. Over here, over about 26.25. I'm looking for it to also go back up to the $29 level. SPPI, I think that it's probably headed for the 1675 or so on this go round. That's where the next level of resistance really is. And Terex, I think it wants to retest $36, maybe even 37. So, but this high volume spike is hanging out there. I think wants to be retested. TLRD over 23.50. I'd be looking for it to move up into the 25 area. And TRIP over 64.18. I think that it goes to $67 or maybe even a little bit higher. The last one on the list here is WRK. Over here, over this 47.25 to 47.50, we're in the gap. And first level will be about 51.50, and the ultimate level would be up here around 53.75. Okay, 1 second. The sound, is the sound okay? Buddy, come on in. Damn it. Now sit down. I'm on the radio, damn it. Okay, thank you. Yeah, I just muted it, but because I was playing around with it. Okay, great. Now that I've gone through those, let's go over the shorts that I had out there. They may or may not be viable now, but Stars, STZ, looks like it came up here, moved up to the resistance level around the $200 level, and looks like it might want to go back down to 190. The next one I had on the list is Mo, basically a reversion to the mean bounce. If we get any follow through to the downside, I'm looking for 53.20 to 53.25. Electronic Arts, EA, again, reversion to the mean bounce to the 17, go down and retest probably 80.90, a couple of dollars lower. Next one is DBX, Dustbox, no Dropbox. The possibility for it to drop down to 21.60, maybe even lower. And the last one on my short list is CNK. And this one did a good reverse of the mean and looks like it probably wants to go down to the 36.25 level. Okay. Let me look at your questions there. Sit down, buddy, or I'll throw your ass out of here. Yes, Bobby, the futures are up big. Naresh, are you looking for government motors? We're not ready yet for individual stocks. Gigi's talking about a hedge against a short or NQ future. I'll ask in just a minute what you mean about that. That sounds like probably. Don't give me no. Don't give me your individual stocks yet. We're not ready for that yet. Okay. All right. Let me go back. We'll let you know the one thing that we're going to actually ka-ching, do a little marketing here is that we do have a 30-day trial for $14, about 46 cents a day, on all three of the services that we have out there: Hit and Run, Right Way Options, and then my Top Gun Trading. So follow this link and you'll find out more about it, and you can do a sign up. $14 is less than a dinner for two at McDonald's, or a dinner for one at Chili's or Applebee's, probably. All right, I'm going to ask for questions. I don't know about the business on the scanner, Malcolm. I'm sorry. You're talking about LTA? I do not know. General questions on anything you've seen here, either things about my moving averages, how my charts are set up, patterns that I look for, scans that I use to find possible setups, things like that first. We're going to have plenty of time for your individual stocks, don't worry. Why 17-day moving average on crude oil? Well, why 17-day moving average on anything? I played around with all kinds of moving averages. Before coming to Rick's room, I used to use a 9 exponential moving average. I kept getting so many questions, so I moved to the 8 because it's basically the same. I don't use any of them for absolute triggers. I use them primarily to help visualize the scan and to help me with trying to scan for candidates. But I found that the 20 simple was not sensitive enough, and I used the 17 exponential to try to determine what the moving averages are. Let me show you the EMAs. I use the 2 of the EMAs of my 3. I use the 8 and the 17, and that basically tells me where the where the trend is. See, like AMAT, the trend is changing. ANF, the trend is trying to change. Builder, you see all of them are trying to point upwards. They're coming up off the bottom. TripAdvisor has been in a little bit of a rise for a while, and hoping for a little bit of more upside. Okay. Now, I hope that answered your question, Greg. Where do I expect the market to end the year? I have no earthly idea. If I knew, I wouldn't be here talking to you today. On TC2000, what do I use the anchored tool for? And I don't know what you mean by anchored. Could you explain that? Why do I use stochastics along with RSI, etc.? No, I don't use stochastics and RSI. It is a stochastics RSI. It is its own indicator. It's stochastics applied to RSI. So it's an oscillator of an oscillator, and the parameter is 3 with a percent K3 and a percent D3. So it would be, you'd probably look at it as stochastic RSI 7733, or in some implementations it's only 773. I use my stochastics RSI as a confirming indicator to give me an idea of where momentum is and when the trend might change. Like, what's a good one? Here, when Abercrombie and Fitch came up off the bottom, it was ahead of earnings, so there was no way that I was going to go on in ahead of it. Let's find, I think TripAdvisor might be one. Yeah, TripAdvisor went up here. We day traded it on this big high volume day. It came back down and then re-entered here on basically a J hook. And as the stochastics RSI and balance of power were reconfirming the move higher. Now it does have to get over the 64.25 level. It has high float. I do expect that the $67 level gets retested. In full disclosure, I've been long options on this for a little bit of time, over a week. Anchors and the drawing tools bars. This anchor here, never used it. It's anchored VWAP. I've never used it. I've never used a pitchfork. I don't use the GAN fan. There's a lot of here. The speed line, don't use it. Tyrone levels, don't use it. Fibonacci arcs, don't use it. Fibonacci fans, don't use it. Okay. Let's see here. In your day trading views, do you say options were discussed as well as stocks? Yes, Sarah. We talk about options. A lot of the times we will enter a trade on, say, where Trip was doing one of these things, and what was it the other day? Not Beacon. Beacon would have been one to use. Beacon on its day, now doing a 45-degree run. We would trade options here. We could either sell most of our options on a big run day and maybe hang on to one at the end of the day, or if we like what we see in, what was the other, I'm trying to remember, let me go back. I've already eliminated a lot of the Foot Locker over here, because Foot Locker was going to move, we thought, from this 53.50 to 55.5 level. We initiated an options trade at the beginning of the day over here, right after its earnings, and I sold at 55.50. It looks like it might now want to go up towards 59. But we'll trade options and swing them for 1 to 2 or 3 days. We will trade in and out of options on the same day if the pattern suggests that we do that. Nope. Trying to. All right. Hopefully that answered your question, Sarah. If you have any other questions, ask again. What time frame do you trade for futures and options? Futures would be measured in fractions of minutes. A lot of the trades are only in for 2 to 5 minutes, whereas the options, you could probably want to try to pick up a trend, 5-minute trend, beyond for 15 minutes to 2 hours at a minimum, maybe 1 to 2 days otherwise. 100 SMA, how important is this in your trading? It isn't. what happens on a rounded bottom breakout. I noticed after Rick was posting a bunch of them out there that the 100, so this is a rounded bottom breakout, the difference between these two, or at least it's a wannabe. Let's see if it really fits the criteria. Yes, it does. It's 18%. But a target area would be approximately where the 100 simple is. And in fact, I go back and look over and I see a plateau of price somewhere around this $56 level. And that would be a target. I would also see a little wiggle here, probably at 54, but the big one's around 56. And that's just what I've done, is I'm just kind of an intermediate target. Target 1 instead of target 2. And my target 2 would be the declining 200, which is probably going to be somewhere around 61. Tool under fib projection. Well, there's Fibonacci time zones. You talk about this anchor, Mike? I don't use that anchor at all. I just put it on there and now I need to take it off. All right. Okay. All right. We have about 30 minutes here. I've just put out, more. Actually, most of the time I do at or a little bit in the money on options KG. Go ahead and poke out one stock and one stock only, please. And only one symbol, and identify whether you're long or short or looking at a long or a short, so we go in the right direction. How do I decide enough liquidity? Basically, I look there and see if it has normally 50 to 100 contracts on the strike that I'm looking at. That's usually what I look for. So in my case, if I were looking at, choose one here, Beacon, and I was looking at December's or whatever, I'd look over here, anything that's 25 to 22 and a half and whatever, those wouldn't make it because the open interest is not there, but there would be a good open interest where we had 900 or whatever. That's the $30 level, which is, yeah, it's acceptable where it is. And the other thing I look for is I look for somewhere around a 0.7 delta or better. Now, on an intraday basis, I try to get a little bit over 50-50. But what I need to do, in my mind, is I need to go ahead and plan on it rising. If that's what it should do. If I had a 0.5 delta, if it rises $1, I'm only going to get 50 cents on it. If I have a 0.7 delta, it'll rise about 70 cents on every dollar that it rises. I want to probably leverage my money a little bit better, and I want to get 0.6 to 0.7, and I probably want to be out there enough in time, somewhere around 2, 3, 4 weeks, because if I don't do that, then I won't necessarily be able to sell it, and time will start working against me in that last 2 weeks. And I want to make it attractive to the next buyer to take away from me. All right. And I enter based upon the chart. All right, so how do I decide enough liquidity? Don't know. What if you have options that close Wednesday? Do they close intraday Tuesday? I do not know, DM. I would contact your broker. It's the best thing I can say. Okay, Greg wants to look at Baba. Uh, Baba, because it's an ADR, gaps a lot. If I put it on, say, a 3-day chart, you'll see fewer gaps. Um, I don't know. I'm looking here. If it gets over 170, it may go a little bit higher, but you could run into some resistance at 166 and a half. Will it gap above that on Monday? Possibly. I really don't have a good feel for Baba. The fact is on Baba. Let me see if this works. Yeah, it does. See how it did this? I would expect that grind to continue, except I think we're going to probably get a gap up. I suspect we're probably going to get a gap close to this 166 and a half. And I do not know if it'll hold. Intech, NTEC. Never heard of that one. Okay, first of all, you're probably attracted because it went up on extraordinary volume on Friday. The average daily volume over the last 20 days is 194, but in fact, most of it is into the 100 and 190s and lower. The average before Friday was 114. This is way too low for us to be trading, in my opinion. If we go back here before October, it was trading 25,000 shares a day. This is not one that I think you should be interested in. This could be what I call a musical chair stop, and where you are not wanting to be left holding the stock when the music stops. Could it work? Could people make money on it? Sure. It's way too risky for me and for me to even really discuss too much. Cisco Long. Sorry about that, Mr. Tom. Sorry, Tiz. Tom wants to look at Cisco. Cisco, it's kind of in a no man's land here. You look at the trading range is basically 49 down to about 43 and a half, 44. So we're really looking at, if it gets over here, where's our next target? 49 and a half. Where's your stop? Assuming we gap up a little bit on Monday, your stop has got to be down here somewhere. That's, with the target being about this level. That's too little reward to risk to me. So I don't think that it's, now, could it be a good purchase if we did a pullback? Possibly. Somehow I've got a thin pencil. Yeah, there we go. Nope. Nope. All right, I'm not going to be able to figure it out. Bob S. wants to look at Moss. Thinking about going long? MOS. Again, a little bit of a trading range box. Unless you get a breakout above, and you're playing a breakout, I don't think I'd be going long here. Where's the stop on any kind of move? At a minimum, it's right down here about 35 and a half. I don't see the good reward to risk ratio. In fact, right now in the markets, I don't see a ton of them that are really have good reward to risk. We've been up too much lately, and we don't really have good reward to risk ratios. PFE, I sold PFE the other day too early as it got up to the 45 and a half. I'd let it pull back. Let it go sideways or pull back before you get into Pfizer. Same goes with Lilly. What was the other thing with Merck? Same thing. They're too far gone. Yes, they worked, but we're too late to get on it, to jump on the bandwagon. Too late for the party. Let's wait for the party to be over and to have the after party. Aaron wants to look at URI. And what I'm going to do, I'm going to put him to another line in the sand here. No more stocks. URI. URI is in a pretty decent area. We've got basically a double bottom here around 107. And a move over 119 to 120. May move back to 131. You're going to have some pocket of resistance around 121 to 122. But it does look like it may want to do it to go upwards. Although this could also be just a bear flag. We won't know. So if it goes down below this level here, I don't think I'd want to be in it. And if it goes higher, it needs to continue to move higher. Happy wants to look at CGC, Canopy Growth. Canopy Growth was one of the ones that was touted back here in August and went higher, did a plateau distribution, and now we're in a downtrend. Look at the EMAs, they're in a downtrend until we get going higher. I don't want to be a party to this one. What I would want it to do is make a higher high, higher low, curl back up, and then I have permission to buy. But not before. We're still in a downtrend. If you notice, my 8 and my 17 are pointed downwards. As long as those are both pointed down, I don't go long. Bob S. wants to know about deer. He's long already. Pretty good here. When we did this little breakout on Friday, we talked about that in our room. I think it probably wants to go to 158 plus. And we were talking about Cat did a little mini breakout, although it's coming from a low area. And Terex was one I talked about, again, coming from a low area, wanting to retest it. Sorry about the voice. Roger Deere, you're going to need a pullback or a pause. It's kind of late right now because you're in no man's land, because if you went long while it started to rise, which it might do on Monday, your stop has got to be all the way down here around 150. It's too far down. Walter S. wants to look at Micro Squish, Mr. Softy. Over about 112, Mr. Softy probably wants to go to 115. Baxter. I had Baxter listed here, don't know why it was in yellow. Over the 68.75, it wants to go into the 70s. It has good bop, which is pretty good. I like it. Its earnings are out in the future, so we're okay for that. Did I already mention Baba? Yes, it's way too wishy-washy for me. Too raggedy. It will probably gap up and or run to 166.5 on Monday, Tuesday, and it's probably going to be extended too much for me. XBI long. Well, it's kind of did some semblance of a double bottom here, a little bit of a double bottom there. It made a higher low. As long as it continues to make higher highs, maybe 85. It does not have a good lot of bop in it. It will not move a lot. Although I guess it does move 3.5% a day. ETFs normally don't move a lot. Yeah, this 84 to 85 is going to be a pretty big area to move. I guess I could see doing that. LABU is another one, and I kind of like LABU better than the XBI. Don't ask me why. I just have. And it looks like it's got room up to 59 with no intermediate levels. Goose. God wants to look at Goose. Goose is kind of in the middle of no man's land. The old trading range here. Basically from 70 down to about 64. In the middle is not the place to be getting long or short. On the extremes, maybe on the bottom, if it breaks, it pulls down and starts to curl back up, goes sideways and get us some sort of entry, but not right here, sir. I will not sanction that one. See how I'm mostly a negative? That basically is mostly and basically, okay? Nice good pause here on the 50. Tandem, good volume. On trades higher, it could go up to 40 to the mid 40s here. I don't have a great feeling of bop on it. Stochastics RSI is just, it's over, kind of in the overbought territory, but we could stay there for a while. Yeah. So it could work. I'm not sure. I'm not a fan of IBM in any way, shape, or form, but the pattern here says at 125, it could go to 130. It will pause at 130, will be the declining 50, and you'll probably get a reaction there from the hedge funds. Notice that the balance of power is decreasing as we rise in price. And a lot of people got fooled with this balance of power back here before it reported earnings and gapped down. EMAs, we're trying to bottom out. It's a process. Like I said, over 125, it could go up $5. It would have to be a very short-term trade in my book. PBI, I'm not sure how they're still in business. Over 850. I can go see maybe to $9. I don't think there's enough money in it. Even if the pattern were good, it's a little iffy on the pattern right now. There's a 3-day, and you see how the 950 to 960 is a resistance level. And when I go into a weekly, you can definitely see it here in the 950 to 960 area. I think there are better ones out there. It had a really good move on its earnings, and then it's kind of grinding higher with the markets now. The ultimate target would be somewhere in the middle of this morass over here. If I have to spend that much time looking at it, I need to move on. Bib Long, Aaron wants to know. Hey Aaron, what's this thing about putting multiple stock symbols out there? Come on. Help me out, please. Over 333. You've got a little bit of resistance on the overheads here. Curmudgeon. It's a little bit better over about 142 to 143. Maybe up to the 148 to 150 level. We already talked about CAT. Lamb Research. The Lamb Research looks pretty decent here. Semis really got beat down for a month or so. And if it can get over this 160, I can see the low 170s easily. Thanks for Lamb. I'm going to mark that up. TVTY. Little on the low side volume wise for me. Back over here, the volume's picked up a little bit. We've probably had our run. This move up, followed by the curl back and the move up. The time to enter this one was right here, right around 37, breaking above all these. Now, one of the things that gets me, you see all these wicks here? That tells me that that's probably a very spready stock. That's usually something that happens when a stock has low volume. The spreads would be 20 or 30 cents. And you'll see lots of wicks. I like to avoid those. I don't want to already start 20 or 30 cents in the hole. Which is another reason for having my volumes up 750 to 800, maybe a million shares. There are enough shares out there to trade. But yes, this one could have been taken on this pullback. Healthcare stocks have been doing very well. United Health started to pull back a little bit. I've got some of that. CVS, I think, was doing okay. Molina Health. And Molina could go try to retest this volume spike here, but I'm not sure if that's a real spike or not. Sometimes we get bad ticks in the data in TC2000, so I would have to look at confirm it somewhere else. Nancy's looking at Amazon. AMZN. Now, Amazon's breaking the downtrend. That's not what I was asking for, dude. If I go too fast, I usually get the wrong one. That's kind of what we're in. We're in a short-term trend right there. Over this 1700, we may go to 1750 to 18 and a quarter. So it's probably going to gap up on Monday. You're probably not going to get a good indication. It needs to gap up more than the overall Qs, than the overall markets. If it doesn't do that, it's just showing relative strength. DNW is looking at Teva. You're in a 23.25 call spread. Called credit spread. Okay, so you're basically playing the short side. Will it get to 23? Probably not. It looks like it wants to roll over. You're probably pretty good with this one, Dan. I would say that if it gets over 22 and a half, you might want to get a little concerned. Hertz. Hertz is on my do not trade list at the moment. I was in and out of here a couple of times and it got smacked. This was just not showing any consistency. You know, this should have been a follow through with this. With this area right there, we should have gotten a move up. Well, we didn't. And then when we got the move up, we followed it on the very next day. We totally negated it with this down day here. I was originally saying that if we got over 20, we would go to 22. I don't know now. This one has not behaved very well. All right, let's see how many we've got down below the line here. Please don't put any more in. You put in after I put the second dash line. Robin, I did not look at the T20 T2122, but I'll do that for you right now because I was thinking about it. The T2122, for those who don't know, is the 4-week new high divided by new low ratio. We are currently sitting at 62.71. The blue line here is the S&P 500, and these magenta numbered lines are my observation over the last 10 years or so, that we get down into this level down here, we're in a bounce zone, and we get up into this level, we're in a pullback zone, and most of the time we spend the time in no man's land. We're in no man's land, and we're really kind of on the rise. We're probably going to get closer to this 85 tomorrow. Meanwhile, I was looking at QYLD, and there's somebody said something about the volume. Yeah, 150,000 should not even be looking at it. Now, it is an ETF, but the other problem is that it's in a downtrend. It's trying to bottom, but we need for it to make higher highs and higher lows. It's made an equal high. What does the Horizons ETF Trust own? So I don't think I'd be in it based on volume. Sometimes with a very, very long-term hold, something like a PFLT, there's 150,000. But this is one that I look on weekly basis or an area chart, something you would want to hold over a longer period of time and not be trading in and out. Okay. All right, VCell and BA are the last two. VCell's kind of in limbo. It's on all-time highs. The volume's okay. The other thing that I look at the average to range. This one's 91 cents. That's okay. So probably over $18 or some sort of pullback and curl back up. Had really good bounce of power until the last 2 days. Boeing, last one. Boeing bounced off the bottom. Boing. At some point, we're going to need some sort of pullback. I suspect that we might, with the news overnight, we may rise. But I'd be looking for a pause or pullback and get in after that. Maybe. See, it is coming off of a protracted downtrend now. If you're looking at a longer term position or whatever, might want to wait for it to pull back and then go back up. Then when you've got to get over 370 or so. Let's look at the area chart. It was really, really nice for a long period of time. Let's be careful that those that were in favor drop out of favor, then do a retest of their norm, maybe a 50 or a 200, and kiss it goodbye. Costco is one of those that I made lots of money over here, 82% or more twice. 100% once and 82% the second time on this, but I bailed out and I'm not getting back in because this area chart is telling me that we're toppy. Stocks tend to run for some period of time, sometimes 2 years, sometimes 2 months, Then they either go into a flat period where they base or they do a pullback. This looks like it's basing. In fact, over here in early 217, it did a base and then a pullback. Back in 2014, 6 to 7 months worth of basing. Don't fight it. Wait for the setup. Okay, Lee did ask a question. V-stop. Okay, V-stop is a volatility stop on these, and it basically is 1.5 standard deviations from the volatility set for 10 days. So V-stop, I'm going to do the edit. The true range period is 10. The true range multiplier is 1.5. And we use that as a notional area where a stop could be. And when I get a flip, Doug will only go long when you're above the green dot. If they have red dots above, he does not like to go long. I, for one, will go with red dots above, but only occasionally. Like if we do a pullback, did a pullback here in Costco and did a J hook there, I would probably go long. I would consider going long about where that red dot is, or maybe a little bit above it, where that red dot is, or maybe a little bit above it. So Doug and I are not far off. TX wants to know how I use the area chart. Primarily, this looks at the big picture on something, and it's ones that I use on my major holdings that I'm doing long-term holds on or attempting to. Raytheon, I exited back here when it topped out. I was trying to hold on, but once it went down there, I said goodbye. Disney, fortunately, I hung through it, and I'm back up here to 115. But you would look at, let's do here. You try to get, this is a weekly chart, and it basically tries to give me the big picture. And these moving averages are 10 times 5 would be 50, 40 times 5 would be the 200, 20 times 5 would be the 100. So that gives me 3 moving averages to, when they're both all pointing up, or at least these two, the shortest one pointing up, I probably want to be long. But when they are getting crossed over and pointing down, it's probably time to exit, which is what happened with Raytheon. I kind of lost it back here in June. BA didn't quite lose it. Lockmart lost it. The reason Boeing didn't lose it, it's not truly just a defense contractor. It's got civil aviation in it. Lockmart, primarily government related. General Dynamics, Northrop Grumman, also government related. You mean why? Yeah, so I can judge the overall trend, where the longer term trend is. It's easier to see. Hope that helps, TX. And DY asked about UAL. I will point out that airlines have been hot. American, Delta, UAL, Alaska, all been hot, but it's too late. Don't be trying to jump on the bandwagon. Don't try to jump on the train after it's left the station. You're going to fall in the tracks and get run over. All right, it's 9 a.m. 9 a.m. 9 p.m. and I need to run. Thank you very much, folks, for showing up, and I hope this has been helpful, and you'll think about giving us a try and a look-see. All right, take care, and if I don't see you before Christmas, happy holidays.